Hello, and welcome back to your South King County Real Estate Update. This is a very special episode of your South King County Real Estate Update because it is the year-end episode, the 2022 recap and the 2023 predictions. So I am very excited about this. There's a ton to get through. I'm just going to jump right on into these slides. So today is December 29th. Almost the end of the year, and let's hop into it and find out what happened this year. This is your 2022 recap. For 2022, the yellow line is that as our current year, and we don't have our December numbers yet because December is not over, but we do have through November, and it shows us a pretty good comparison. These are new resale listings coming to the market in Southeast King County. So the yellow line, you can see it pops up above everywhere, all the previous years in March, and then kind of falls back in line and then drops below where we were in the second half of the year. So this just means that there were a ton of homes coming to market in March and increasing into June. And then we didn't really have that many homes coming to the market after that. Interest rates were rising. People were a little bit hesitant, I guess, to list their home. If we look at buyer activity, we can see that same pop up in March. And May was the peak this year because of those rising interest rates. And you can see that our buyer demand just kind of dropped down and has remained below where we've seen in previous years for the rest of the year. These are those two charts combined. So the green is listed homes and the orange is pended. You can see that 2020 and 2021, the orange bars are basically right up to the green line. So we are selling homes just as quick as they are coming to the market. And now that gap has increased. There's just more homes coming to the market compared to the number of buyers that are out there. So we have a greater inventory collecting on the market right now. So this is the Allen Pope charts. I zoomed in on the last couple of years here so you can see, but I thought it was important to look back and show 2018, 2019, where the blue line, that's inventory, raises above the net pending sales. We did have more inventory than pending sales in 2018 and 2019. And then the pandemic hit and that reversed. So we had more net pending sales than inventory. We're just eating up all that inventory as fast as we can. That changed in June. So it was a pretty quick shift on that transition there, but we're just basically kind of where we were back in 2018, 2019. If we look at the numbers, especially 2018, this big blue jump up here, that's kind of similar to what happened here. For showing traffic, you can see this whole year has been a little bit depressed compared to what we have seen the last couple of years. And this dip down here was for the Christmas holiday, and we should expect showing traffic to increase as we head into January. For Southeast King County, this is from J. Lennox Scott, Chairman and CEO of John L. Scott. You can see the percentage of new listings pended in the first 30 days. It really varies by price point. So 350K to 500K, 67% of those listings are still going pending in the first 30 days. So that price point is still a frenzied market. If we look at over 1.5 million, only 15.4 of those homes are going pending in the first 30 days. So this is a little bit more selective, and we have all of those intensity levels represented here across the different price points. So, and it can vary a lot by area too. So if we look at Southwest King County, there's not as low numbers on the high end and not as high numbers in this mid-range, but overall, we are at a very strong buyer demand with new listings going pending in the first 30 days, just below 50%. And for our local area breakdown, this is what we have been seeing for the past couple of years. The one down here is just this year. So we'll look at this, but we can see that the new listings started jumping up in May here, and we just got so much more inventory on the market. As interest rates started to rise, those people that were thinking about listing their homes rushed the process, got their home on the market, hoping to get some of that buyer frenzy before it died down. But we have dropped off significantly at the end of the year here, but that's kind of what we expect to see each year. In the past 7 days, we've only had 70 new listings come to market in King County, but we had 263 pending listings. So we had a lot more inventory heading into the last couple of weeks. Now we're seeing that winter cleanup. There's a lot more homes going pending than coming to the market. So we're going to start the year with a pretty selective inventory. For our home price activity, this breaks it out into the 4-county region. For King, we're still up year over year. We've come down on prices significantly from May. I'm not going to deny that, but look how fast from January to May, we jumped up in those prices. That is a huge jump. So that was a little bit overheated. So we're just seeing a correction from that little pop there, which is why we came down so drastically since May, but we're still above where we were a year ago. So the average home price a year ago was $820, and now it's $827. So we're kind of up a little bit, but heading towards flat. And homes and condos are performing very differently right now. There's some areas where it's fairly similar, but look at the differences in these numbers. For Southeast King County, median prices have decreased 2.2% year over year. But in condos, they've actually increased ever so slightly at 0.6%. Our home prices increased 0.5% in Southwest King County. And in condos, it's 21% increase. This is just showing that when you're going out for your own home search, it is important to know what you're looking for and the market in that area and market category. So price point, whether it's condo or single family home, all of these markets are very different. And for mortgage rates, 2022 was defined by these rising mortgage rates. At the beginning of the year, we started at 3.22, incredibly low interest rates. And this is the only year since they have been keeping record that we have doubled the interest rate in a single year. So this is quite a shock to people that are looking at purchasing a home. It's not an easy number to digest, the fact that we have doubled our interest rates since the beginning of the year. However, it appears as though we have reached the peak in November. We've come down about a percentage point since November. It's been a little bit volatile, but we are now starting to see overall a downward trend. And if we look at today's interest rates, we are at 6.5 for our daily interest rate. So this is significantly up from the beginning of the year, but it's way down from October and the beginning of November. This huge drop here, this was a big deal. And then we've kind of stabilized in November and then dropped down again. And we're trying to find that stability of where interest rates are going to land for next year. And just a little quick blip in the news, pending home sales fell more than expected in November, but some see a bounce on the horizon. I'll show a couple graphs in a second here, but we did see pending home sales drop off significantly nationwide. It was a big drop, but like we had our big spike in home prices earlier in the year, and then that's come down. I feel like this drop is going to bounce and come back up. Anything that has a really big pace on its move, oftentimes it'll go a little bit over and then correct. But if we're looking at pending home sales in 2020, this big drop down here is the shutdowns in 2020 when everything stopped. And then pending home sales just skyrocketed back way above levels that it was at before. So our year over year percentage change, if we look down below, we have that shock down, and then we had our Q2 and end of Q1, beginning of Q2 2021 spike here, and then pending home sales have generally tailed off since then, and we are back down to fairly depressed levels on our pending home sales. Home sales are searching for a floor. We'll know it when we see it. Until then, we can only hope and assume that some relief in the form of lower mortgage rates and more even-keeled inflation would help both demand and supply sides of the home sales equation. And here's a quote from Lawrence Yoon from National Association of Realtors. There are approximately 2 months of lag time between mortgage rates and home sales. With mortgage rates falling through December, home buying activity should inevitably rebound in the coming months and help economic growth. So we started out with a really hot buying season at the beginning of 2022. Interest rates shot up and put a damper on the buyer activity. And we've seen that depressed activity leading into the end of the year. So for our 2023 forecast, I thought this was a good quote. The housing market is expected to face continued uncertainty heading into 2023 as consumers, financial markets, and policymakers work through their respective challenges in today's economy. So we're not out of it yet. I feel like there's going to be a little bit more volatility heading forward, but we are looking for that point of stability in the markets. It'll come. It's just the timing. I really just wanted to address this head on. As far as, is there a housing market crash coming? They did a survey. 41% of Americans believe the housing market will crash in the next 12 months. 72% of those who believe that the housing market will crash think it'll be as bad or worse as the 2008 housing market collapse. Don't get scared yet. I'm going to address this. And 58% of the group that expects a housing crash in the next year say they're postponing housing-related changes. But if we take a deeper look at this, it's a totally different setup than 2008. This is not the same thing. The last housing cycle, job cuts, there was 8 million job cuts. Now we're not really seeing that. Total jobs, 138 million. We have 20 million more jobs now than we had back then. Subprime loans, there's virtually none of those now, which is what caused the last housing cycle crash. We have less inventory on the market, so that supply and demand's still there for the amount of supply that we have. And there's only 3.6% mortgage delinquency now compared to 10% back then, and homes in foreclosure. 4.6% of homes were in foreclosure 15 years ago. Now it's 0.6%. So it's just a totally different setup. And just to touch on the foreclosures thing, because I know that is one of the biggest fears. There's been a lot of headlines about foreclosures increasing, but remember, we had a foreclosure moratorium, so you couldn't foreclose on people. So the fact that it's gone up is not really that surprising. And I don't want to undermine anybody who is going through a foreclosure, because it is a disaster for that individual family. It's not a fun thing. And I don't want anyone to go through that. But overall, you can see that we are way lower than we have been. In 2019, pre-pandemic, we had 278,000 foreclosures. In 2022, we had 88,000. So pretty big difference there. And if we look at the mortgage rate projections, everybody has a different idea of what's going on exactly, but the averages show that they're looking to end the year around 6%. So gradually ticking down on interest rates throughout the course of 2023 until we reach 6% at the end of the year. Because we see a slowdown and we see the inflation comparisons start to become more and more favorable, you'll see the inflation number move lower, 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 lower. And as a result, mortgage rates should move similarly on a downward trajectory, probably giving us around 5%, below 5% within the next 6 months. So 5% or slightly below is this prediction. And I agree, inflation is the enemy of mortgage rates. So as long as we have our inflation, get that inflation under control, then interest rates will tick down following that. And this is from Lawrence. You in the upcoming months should see a return of buyers as mortgage rates appear to have already peaked and have been coming down since mid-November. If mortgage rates go down and buyer demand subsequently goes up, we can expect home prices to increase. So if we look at our home price forecast for 2023, the average home price increase for the entire year is 0.3%. So pretty flat, but it is all over the board. We have realtor.com at 5.4% increase and Ivy Zelman down here at 5.1% decrease. I don't think either of those will happen. I think we'll be somewhere in the middle. So the current price forecast average is 0.3%. We will continue to keep an eye on these forecasts because they change a lot throughout the year. As there's new information available, these individuals or organizations will update their predictions, and I'll keep you updated on that. For total home sales, this year felt pretty slow, especially compared to the last 2 years. It was just bananas the last couple of years. So we haven't seen this few home sales since 2015. So it definitely feels way slower, and projections are that we'll have even fewer home sales in this coming year. We're still going to have 5.1 million home sales on average, according to the average of these predictions. So it's not like a housing crash. So for anybody who is thinking about buying a home in 2023, I have a couple of bullet points for you. Buyer opportunities for 2023, additional selection and availability. There will be more to choose from next year, especially than right now because we're in the winter cleanup, but it looks like there's going to be a little bit more inventory on the market, more to choose from. Homes close to job centers are now at market price. So we have seen like the Seattle and Bellevue business hubs, those prices have come down year over year. As King County as a whole, we're at that pretty flat stage, but Seattle and Bellevue, they've dropped a bit more than other areas, but they also, especially Bellevue, inflated more than other areas. Fewer multiple offer situations with premium pricing, so less buyer demand, less buyer competition. Quick action market remains in the more affordable and mid-price ranges where 80% of sales activity takes place. Get pre-approved for a home loan, or better yet, be fully underwritten before contract purchase. This is pretty much non-negotiable in any market, but a very important point. Economists forecast peak home mortgage interest rates in the months ahead. Interest rates are expected to moderate in 2023. Lock in market price today with the possibility of refinancing when interest rates lower. So if you buy a home today at today's interest rates, you can refinance if rates go down in the future and save money. And then if interest rates go down and buyer activity pops back up, that same home may have gotten bid up in a bidding war, but because you bought when there wasn't as much activity going on, you can take advantage of those lower rates and refinance. Just get into the house first and then refinance later. Financing options, interest rate buy downs and 5 or 7 year adjustable rate home mortgages can help lower your interest rate and your monthly payment. So many creative options out there, and this is a very personal thing. So if you're thinking about buying a home, let's sit down and chat about what options are best for you. And for homeowners who do not have a mortgage, it's an extremely opportune time to purchase a home. Seller opportunities. It's okay to buy and sell within same market timing. This is always the case. If you own a home and you move from one home to another, you're not going to really miss out on the appreciation if you move at the quote wrong time, because you'll own a house either way. So during a frenzied market, buy and sell at premium pricing. Today, buy and sell at market price. Often you will end up with the same net seller equity. So be market ready day one. That just means make sure that your home is properly presented, properly marketed. Have a great real estate agent that gets it up to all the right channels. And the 5 rights that make a sale: house right, yard right, price right, marketing right, and the right listing broker. So if you are looking at selling your home in the next year, I do recommend reaching out earlier in the process just to touch base and see maybe what work needs to be done on the house, what shouldn't. It's never too early to reach out in the process. So that is your 2023 forecast. I am happy to answer any questions, have a conversation with you about your goals or anything else in the area. I do have my buyer and seller guides for winter available, as well as our John L. Scott housing forecast. The one that I took snippets of today was from King County, but we do have lots more of these housing forecasts available. So if you're interested in a different region, reach out, let me know, and I can shoot it your way. And as I said, if you have any questions, please feel free to reach out. If you'd like to make an appointment, have it sit down and have a conversation, I would absolutely love that. So please reach out. I would love to hear from you. If there's any things that you'd like to see in the show next year or not see in the show next year that have been here, I would love your feedback on anything related to the show. I'm always trying to make it better, and I want to deliver you what you would like to hear. So thank you so much for joining me for this special edition of your South King County Real Estate Update. I hope it was very helpful. And if there's anything that needs clarification, again, please reach out. My name is Sarah Eggleston with Stone Egg Realty at John L. Scott, and I will sign off for now and see you next year. Happy 2022 and Happy New Year.